Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. With rising living standards, the world is shifting from a make, use, dispose model to a more sustainable make, use, recycle and reuse one. In India, the government has introduced the Extended Producer Responsibility Regulations. These strict regulations and a growing eco-conscious market suggest that the recycling megatrend is here to stay for a long period. In today's video, we will look at 5 small cap recycling companies that could enjoy sectoral tailwinds and ride this megatrend in 2026. Before we move on, please note, this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. First on our list is EPL. EPL, formerly known as SL Propack, is a small company with big credentials. It's the world's largest specialty packaging company. The company has backward integrated facilities that makes everything from laminate sheets to finished tubes. The plastic tubes it makes contain the products of blue chips in FMCG, pharma, beauty, cosmetics and food industry. With over an 8 billion volume base, it commands 20% global market share in this segment worldwide. In recent years, EPL has been working on its molds and machinery to make them fit to produce recyclable tubes. The management says that 85% of the company's machines are ready to make these recyclable tubes. The share of recyclable tubes was 10% in FY23. It rose to 20% by FY24. By FY26, the share is expected to hit 60%. What's more is the company boasts sustainability rating from EcoVadis Gold, which places it among top 3 plastic making companies. Apart from this, the company has a greenfield facility in Brazil, which is a new market. So far, the company is supplying to one major customer, but is in talks with more. Coming to its financials, the company's sales and net profit have grown at a CAGR of 9% and 12% respectively in the past 5 years. The company has an average ROE and ROCE of 13% and 16% during the same period. Going forward, the company is looking to enter new markets and has already ramped up efforts in Thailand. Second on the list is Nile. Incorporated in 1984, Nile is a manufacturer of pure lead for battery consumption. The company is an ISO certified secondary manufacturer of pure lead and lead alloys. Its products are supplied to the manufacturers of lead acid batteries, PVC stabilizers and lead oxide. Apart from this, the company also deals in power generation through wind farms. The company has 2 lead recycling plants, one in Chotupal with a capacity of 32,000 tons per annum and the other in Tirupati with a capacity of 75,000 tons per annum. Coming to its financials, the company's sales and net profit have grown at a CAGR of 9% and 12% respectively in the past 5 years. The company has an average ROE and ROCE of 13% and 16% during the same period. The company has the top 2 customers, Amara Raja Batteries, which accounts for 91% of the sales, and Mangal Industries, which accounts for 9% of the sales. The major customer, ARBL, that is Amara Raja Batteries, is in the process of setting up its own lead smelter, which will affect the company's volume offtake. Third on the list is Ganesha Ecosphere. Ganesha Ecosphere is a leading pet waste recycling company in India and is engaged in the manufacturing of recycled polyester staple fiber, spun yarn and dyed texturized yarn in India. The company benefits through government policies such as approving B2B recycling for food-grade applications and mandatory regulations to use recycled PET. Last year, the company launched its new brand, Co-Revise. Co-Revise is dedicated to conserving resources and establishing sustainability by efficiently recycling PET plastic into premium quality products. The company also has a strategic investment of 160 million rupees in the equity share capital of RACE EcoChain. This investment is a part of the company's strategic investment to strengthen its raw material supply of PET waste. Coming to its financials, the company's sales and net profit have grown at a CAGR of 10% and 11% respectively in the past 5 years. The company has an average ROE and ROCE of 9% and 11% during the same time period. In FY24, its sales grew at a steady pace, supported by higher recycling volumes. However, profitability came under pressure as EBITDA margins slipped. The decline was due to an unprecedented surge in PET bottle scrap prices. Going forward, the management expects performance to improve as raw material prices have now cooled and order inflows have strengthened with onset of the festive season. A brownfield expansion of 22,500 tons at Warangal is progressing as planned, and new export orders from Europe have added to the visibility. Next on the list is Indag Rubber. Indag Rubber Limited, incorporated in 1978, is a leading manufacturer of procured thread rubber and allied products for tire retreading for commercial, passenger and off-road vehicles. Originally a JV with Bandek, the company is now fully controlled by the Khemka Group. Indag operates a manufacturing unit in Nalagarh, Himachal Pradesh with a capacity of 20,000 metric tons for thread rubber, 5,000 metric tons for rubber strip gum and 2,200 kiloliters for spray cement. Coming to its financials, the company's sales and net profit have grown at a CAGR of 11% and 27% over the past 3 years. In FY25, the company's total revenue stood at 2.37 billion rupees, down 9% year-on-year, largely due to a decline in state transport undertaking orders. EBITDA dropped 40% year-on-year to 165 million rupees, with margin compressing to 7%, while net profit halved to 84 million rupees. Despite the near-term pressure, the company launched new high-performance products and is expanding internationally across the Middle East, Africa and Eastern Europe. Through its subsidiary MMSPL, Indag has also forayed into power electronics manufacturing for battery energy storage systems, with full-scale commercialization expected in FY26. The company is also engaged in the EV infrastructure JV with Sun Mobility. The management remains optimistic about growth, backed by fleet expansion, rising fuel and tire prices, and policy tailwinds favoring the circular economy. Last on the list is Namo e-waste management. The company was founded in 2014 and it provides end-to-end solutions for the collection, disposal and recycling of electronic and electrical equipments. The company's service portfolio spans EPR compliance under the E-Waste Rules 2022, reverse logistics, secure data destruction, IT asset disposition and refurbishment of used devices. It operates 3 certified recycling plants with a combined capacity of 30,500 metric tons per annum, located in Faridabad, Palwal and Nashik, spread across over 335,000 square feet. While currently operating at just 30 to 35% capacity utilization, the management expects to reach full utilization within the next 18 to 24 months. As of FY25, the company had recycled over 4.8 million laptops, 33 million mobile phones and 1.2 million home appliances, procuring e-waste through a mix of B2B, B2C and aggregator channels. Coming to its financials, the company's sales and net profit have grown at a CAGR of 49% and 67% respectively in the past 3 years. The company has an average ROE and ROCE of 13% and 18% during the same time period. In FY25, revenue grew 50% year-on-year, with EBITDA margin at 9.85% and net profit rising 25%. The company is expanding its capacity with 2 new facilities, one in Nashik focused on lithium-ion battery recycling and another in Hyderabad, taking total capacity above 56,500 metric ton per annum. Namo e-waste management raised 510 million rupees through its IPO, which will fund capex, working capital and generate corporate needs. The management expects to maintain a 45 to 50% CAGR in the near term, supported by rising compliance demand and strong tailwinds in the e-waste ecosystem. With most Indian industries being in an expansionary phase, recycling has become one of the key factors that businesses are looking at. It has become a critical component of sustainable development, and extended producer responsibility ensures that manufacturers take accountability for the entire life cycle of their products, including disposal and recycling. India generates millions of tons of waste annually, and EPR policies are driving a shift towards responsible production and recycling. For investors looking for growth opportunities with strong government backing, recycling stocks offer a compelling investment avenue in India's evolving economy. However, before considering an investment, it's critical to analyze the fundamentals, growth prospects, corporate governance, and valuations of these companies. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.